for the passengers. So this is not the best, of course, situation for them. So we hope that now we are giving with the helicopter and the company, they are giving them the food supply.
The latest incident doesn't seem to have worried investors too much. Shares in Costa Cruises' parent company Carnival fell by as much as 1% on Tuesday. But it may have further damaged the company's reputation and that of the cruising industry.
I'm
sure most people will think hard before going on a cruise now. I've only been on one cruise and I'll never go again.
God,
I wouldn't want to go on a cruise now. You never know, but I suppose we'll need to see how many people keep going on cruises around the world, because even aeroplanes sometimes have problems. But 2 incidents in a month is a serious problem.
Coast Guard say passengers may be on board the Costa Allegra for up to 40 hours as it's towed to a safe port in the Seychelles. Even once everyone gets off the ship safely, Costa Cruises is going to have to explain why one of their liners is in trouble again.
Well, just after the break, we'll take a look at on the buses. Red double-deckers roll back into Britain's capital, I believe just in time for the Olympics. We'll find out next.
Imagine having peace of mind of being completely financially free. Here's your chance. If you could buy an investment property for around $80 per week, which could help you own your own home sooner, save thousands in tax every year, and eventually have an income for life, you'd want to do it, wouldn't you? At Simple Home Invest, we take you by the hand and make this safe and easy for you to achieve.
I'm Deborah Miller from Simple Home Invest. I've helped many people, just like you, invest in properties just like this.
All you need is a secure job, equity in your own home, and we can help you start building real wealth. If you're serious about giving your family a secure future and want to save thousands in tax every year and own your own home sooner, take action now. At Simple Home Invest, we'll help you turn your dreams and goals into a reality. Call Simple Home Invest now on 1800 893 987 or visit simplehomeinvest.com.au.
This session is in wind-down mode. Welcome back to Trading Day. Let's check on the ASX 200. Still posting good gains, up around 1% for the All Ords as well as the benchmark index. Across Asia, markets are rising on hopes of a strong take-up of the ECB's 3-year LTRO operation. Also, earlier we saw U.S. markets close the session above key levels and at their highest level since 2008. And our local market, by the way, incidentally, breaking through that 200-day moving average once again. So everything's looking good around the region. Dow futures again pointing to a higher open on Wall Street tonight. So again, lots to happen between now and then, but everything's just looking quite positive right now. And of course, as I mentioned, the market paying very close attention to tonight's ECB operation, offering 3-year cheap loans to European banks. The so-called LTRO could be a significant bullish catalyst in the months ahead even. FIIG's Mark Todd spoke with Brooke Corty about the expectations for tonight's tender.
I think it's going to be something in the vicinity of 500. It's a lot of money. It's a heck of a lot of money. So it'll be, if you like, it's a litmus test on the banks themselves. So we'll see a lot of analysis around how the banks approach and which banks in particular. So if it's the Spaniards and the Italians and you're using that as a way to bolster the banking system, it will be negatively viewed. But if it's broadly spread across the curve, it'll be probably quite a positive tone.
Mark, you know, in normal times when you see banks scrambling for cheap money, you know, anything they can get their hands on, it would kind of spook people. Chris was just saying, though, there's no stigma attached to this. Back up the truck, load it up, and off you go. Why haven't we got that same stigma? What's going on?
I think, firstly, it's not normal times. It's quite a strange time. And so I'm not necessarily in agreement with Chris at the moment. I think it was the first LTRO was the significant one. I think that was the one that stabilised the banking sector. It was there to save the banks and repair their balance sheets so they could deal with Greece. So in other words, if you hold on your balance sheet something that's worth $1 and it drops to 50 cents, you need more capital. And then in that event, you can get more capital, that you can treat that asset that was worth 50 cents in a different manner. And that was a significant piece. Now the question is, are they going to use that money to bolster inefficiencies that already exist in the banks as opposed to the sovereign debt issue? And for me, that's the key. It's about who tries to borrow the money, not necessarily the volume, and what we would then anticipate they want to use that money for. So that's shoring up to preserve the sovereign risk issue is one thing. To just prepare to save your own bank because you don't perform well, that's a separate issue, and that's the one that everyone will try to assess.
Can we, from where we're sitting, from where you're sitting, you've got probably access to more information than I do. Can you determine what the money's been used for? Or do we find out in a few months when, how do we actually understand exactly what's going on?
It's all around that rumour and innuendo. At the moment, there was a little bit of worry that it was around the Spanish and the Italians, and I suppose if the journalists get involved, and that's where I think you'll come to the fore, if the journalists start to get a theme that they think it's the Spanish and Italians that are borrowing heavily into that market, it'll make people uncomfortable at Spain and Italy. It's around about how it's reported out. It's very important to understand what the ECB says post the issue. So if they say there's 500 and they were very comfortable, broadly dispersed, very happy with the result, it'll set the tone. But if they say, we expect to do another 500 and we'll do that in another 4 months' time, that's a completely different tone. That says that they're talking to the banks, they're doing repo arrangements with the banks, and clearly all the ECBs of the world, all the Feds of the world, they deal in repo all the time, and it gives them a tone of how the bank's performing. And so if they start to say, well, we think we might have to come into that market in 3 months' time as a way to preserve the integrity of the system, the markets will get spooked.
When it comes to the volatility of markets, we have seen that ease off a little bit so far this year, I guess we could say that. Where does the LTRO meet kind of the volatility argument? Does that play into it?
Yeah, that was the one that I really believe that was the one that stabilised the whole piece.
Yeah.
That was the one that was able banks to report some pretty good profits. The European banks and the American banks have reported some pretty solid gains in their own specific sector. And so if you remember, the IMF has come out saying we need a firewall, we need to do all this work around the actual GDP question. And so that's a long-term question around employment and what they're going to do. But in terms of the banks themselves, they've been able to actually do personal firewalls, corporate firewalls. And so the corporate sector's actually performed very well, and that's taken a lot of that instability out of the market. They're such big parts of everyone's equity play, the banking sector itself. And if that stabilises, it has a ripple effect. They talk about being that liquid within the market. They are that.
We haven't even mentioned the word lending. I guess the idea, because, if banks are bringing in more money, I guess when economies are struggling like they are and all of the austerity around, it'd be great if they would actually lend that out to businesses and stimulate the economy in that way. But there's no expectation of that, is there?
Brooke, do not hold your breath waiting for a bank to lend.
Yeah.
They are not going to lend.
So where does this all, where does all this paper shuffling meet the real economy?
It doesn't.
Okay.
The real economy is part of the banking sector. It's in employment and that sort of stuff, but it doesn't help the real economy in any meaningful manner. It's a classic scenario where who are we looking to protect? And we saw it with the Fed easings. The issue around the quantitative easing was, how do I get it to the people? In all honesty, this is how do you preserve the banking sector? That's stage one. Having done that, stage two is how do you create an environment which banks can lend? And remember, while you're asking for them to lend, you're hitting them with legislative changes that says in Basel III, I only want you to lend 50 cents in the dollar, whereas last week you would have lent 75 cents in the dollar to that same borrower. I don't want you to do that. I do not want you to take risk. I don't want you to trade. I just want you to lend money. And at the same time, you've got to, produce a result that the investor's prepared to hold up the share. It's a very tricky place. Banks are worth X, they need to produce Y, and they can only lend a certain amount, which was not as much as they used to be able to lend, because we, the regulator, aka politician, want to protect the bank. So it's very hard for them to be able to lend. So we are well away from that. I think it'll be more around the fiscal policies, it'll be around government policies to inject cash into the system.
And that issue is one that comes straight back to us here in Australia, isn't it?
Correct.
Yeah.
It's around how the banks are saying that they fund themselves, how the banks can then go and lend. The politicians are putting pressure on them on all sides of the divide, saying you need to pass on the reduced rates. But at the same time, they're saying to the politicians in very closed doors, you know that we can't lend too much because we can't put that system under pressure, that you, the politician, need to provide some incentive.